Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Roque with Kent Beadle of Paradigm Futures. And grains, well, we're seeing steady to just a little bit lower prices in just about everything this morning, and some red over in the livestock board as well. And Kent, let's talk about soybeans. We did get a pop yesterday off of some support areas, but we're not seeing a lot of follow through buying here today. The market is still trying to absorb this Argentina export tax news, isn't it?
Yeah, it sure is. It's been an interesting trade so far today. Somebody at 7 o'clock in the morning, when beans were down about a nickel, decided they wanted to buy them, and all of a sudden we were up 5 or 6 cents.
Right.
But we wiped those gains out here after the open. With all of the news being as bearish as it is, it's a little tough to sustain rallies here at this point. But the big story this week, of course, is Argentina waiving export taxes on all of their grains. The immediate impact has been soybeans, where the rumor now is that the Chinese have purchased 20 cargoes. We need to keep a couple things in mind, I think, when we consider this. They've sold 20 cargoes. We're talking about 1.2 million tons of soybeans. In the month of November last year, the United States shipped about 9 million tons of soybean. Okay. The Argentine ending stocks figure, as it's currently listed by the USDA, is a little over 6 million tons. All right. They do not have the ability to, fill the rest of the Chinese program for the balance of the year. And I think there's some interesting things that are going to occur, given that they are selling a chunk of their soybeans that they would normally crush domestically,
right,
and selling them to China. It's going to open up a conversation here down the road that people aren't necessarily contemplating yet. First thing that people might consider is that Argentina may ultimately need then to buy U.S. soybeans. We've already heard some rumors that China has kicked some tires about buying U.S. soybeans. So what's happening here with all of the political blowback as the United States tries to, protect some of its domestic markets and its domestic security, and have a relationship with the Chinese that makes more sense. The levers of power have hurt our soybean exports, but isn't necessarily changing world demand on the balance sheet. It's just making export flows less efficient.
So you think that the 20 cargoes that have been sold so far, that might be the extent of the selling they do to China then, Argentina?
The reports on the news services is that people expect more of this to happen. And I say, okay, they have the beans that they can ship right now, but they've got crush plants in Argentina, and Argentina is the largest crusher and the largest exporter of soybean meal and soybean oil in the world. And those crush plants need beans too. All right. So it's very disappointing, and it's a headline that has triggered an awful lot of selling. But if we think about it, last week we had a huge sell-off because we didn't get any agriculture mentioned in the Trump sheet call. This week we're down on the Argentine news, but we're not down as much. And
I was going to say, should we be holding $10 on the soybean chart here with all of this negative export news?
Well, the technicians who look at history and want to write our soybean export program to China down to zero, they want to talk about beans going to $8. Okay. But we've had lots of bearish ending stocks estimates in the last 2 years where we only fell to $9.35 to $9.50.
Right.
Okay. And here we are at $10. And I frankly don't believe that our export program at 1.7 billion bushels, which is similar to what it was in the last trade war, is unattainable. I do not believe that. I think we are going to ultimately hit that. And the truth is that at a 300 million bushel carryout, if we happen to lose a bushel, due to rust and other drought pressures in the Eastern Corn Belt, we've got a very, very, very tight domestic soybean situation.
All right. Yeah, for sure. All right. The corn market. Corn market's been very resilient through a lot of bearish news, but really the story here has been demand. Mexico just keeps coming at the market. And so if you start seeing yields drop here, how explosive could this get? How positive is this?
Well, again, it depends on the extent. Clearly we had another bearish item here 2 weeks ago when we saw the acreage go up and harvested acreage go up to 90 million. Okay. That the ultimate determinant is going to be where do these yields, finally come in at. And in the end, we're not likely to see enough yield drag to where our ending stocks number gets as tight as it was this year. Of course, as tight as ending stocks got this year, we've never actually traded a price that adequately reflected that type of a number or stocks to use. I think that I think we're going to get through this 430 area. I think that we could have a rally up into the 440, 445 area, which represents 62% correction of the fall that we had from this February high down to the August lows. And yeah.
Well, the last time we got up to that 430, 32 area, tried to fill that get up area, we couldn't get there because we get some farmers selling up at that level. So that's going to be a barrier here or hindrance.
Of course. Right? Yeah, well, it's harvest. I mean, we're going to see some farmers selling because there'll be some bushels that need to be sold. But, the farmer is going to sell as few bushels as he possibly can. Let's just be fair. These prices are still well below cost of production. And last year, the U.S. farmer did see a post-harvest rally in February that, tickled that $5 area in the futures. It never got to $5 cash for most growers, but it did get up that high. And most growers are going to take a look at the carrying charge in the market and try to keep these bushels off the market. And so, what's going to move is what has to move.
Gotcha. Okay, the wheat market technically looks like it's trying to bottom, but we've thought that before here. Do you think that this is the time that we're going to be wrong and it's actually going to bottom?
Well, I've thought that before, frankly. And, you usually get a post-harvest rally.
And you can't stay this cheap this long, can you?
Yeah, well, it has long-term implications, right? We continue to build a demand base when prices are cheap, and we do this across all our grains. We also are going to impact supply, and right now we're planting winter wheat, and I fully expect at these levels the winter wheat acres are going to come back down again. We note that the Russian producer, for example, isn't making any money, and that's already had an impact on what they're willing to produce. So these are long-term impacts when we're dealing with prices that are this unprofitable. Now, going back to the technical side, we're seeing bullish divergences on the RSIs and the stochastics. Historically, that can be a pretty good indicator of a low, but you have to manage those types of risks. And we haven't really quite turned the future's bullish yet. We'd like to see it close in Chicago up above that 530, 535 area.
Gotcha. Okay, the cattle market consolidating here today. Live cattle actually did that a little bit yesterday. Do we have all the bullish news from the New World screwworm, cattle on feed, some of those things? Is it all programmed in here? Do we need higher cash now to basically push the market back up?
But ultimately, you're going to need higher cash to get the market to make new highs. The problem is that time it takes for us to actually start generating the kind of supplies that would suggest that we've made a top in the cash. We don't know that that's going to happen here for quite some time. Obviously, we make highs when things are most bullish, and clearly there's a lot of bullish information that's been out there, and the market is overbought again, or it got itself overbought. We haven't made new highs from the standpoint of the speculative long. They've been actually in a liquidation phase here now for, with that position staying fairly flat, but well off of its highs. I think we could see some more corrective activity, quite frankly, but I'm not willing to call a high in the market and say that we've made a top.
Yeah. Are hogs just seeing some profit taking after a new contract highs yesterday?
Yeah, I think so. And, where we're uncomfortable right now in the hogs is the size of the speculative position, which on my favored CFTC report, which is the CIT version of that report, that position was at a record high this past week. And so, we have really good prices. We have excellent crush margins historically, going back to the really cheap meal and the inexpensive corn that we have. So, we should be getting some hedge selling from the production side of that business, and I think we have been doing that. What's supportive to hogs, of course, is the massive discount in value that it still has relative to the price of beef.
We do have a hogs and pigs report out tomorrow too, so some of this could be a little squaring ahead of that.
Absolutely. It's going to be an interesting report too, because we've started to see slaughter pick up a little bit. Might we get some sort of a surprise that there's a few more pigs out there than we thought? Well, we might be a little bit concerned about that given the higher slaughter, and so that might be causing some of the profit taking out of it.
Gotcha. All right, Kent, this may be you and I's last interview that we do now that you're retiring. I got to tell you, thank you so much. I've learned so much from you over the years that I've worked with you, and I will miss you tremendously.
Well, I will miss you too, and I will miss all of the professionals in the agricultural industry that I've worked with over the last 41 years. I already miss the interactions I have with growers and ranchers. As I've been out of that now for a couple of months, but yeah, it's been a joy. It's been a pleasure to work in this industry. It is difficult. It's frustrating at times, but it's given me an awful lot of satisfaction and pleasure.
Yeah, it's never been tougher than it is now, is it?
Yeah. I actually started in the industry 41 years ago in 1985, and it was bad when I started. It's bad today, but there's been an awful lot of good that's in the rearview mirror. Yeah.
All right. Thanks so much. Appreciate it. Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Talk with your retailer or visit Brevant.com/jackpot to get started.